All right then, the African Guarantee Fund for Small and Medium-Sized Enterprises, it's entered a re-guarantee transaction for an amount of about $74 million with GuarantCo to increase its guarantee capacity for SME financing. Now, SMEs obviously have a large and growing impact on economic output in emerging markets and frontier ones as well. And they are the main creators of jobs, particularly across Africa. So strengthening Africa's infrastructure as well, that's also critical for development. And it is through this that African countries become a lot more competitive at a global level. Now, with this increased capacity, AGF should be able to support larger local currency transactions for SMEs involved in the infrastructure space. So let's dig deeper into AGF. Joshua Obengele is the head of risk at the African Guarantee Fund, is live in studio with us tonight. Thank you for your time.
Thank you very much.
So let me understand what you guys have done in Kenya. $80 million worth of guarantees provided in Kenya between 2012 to around last year, and you want to triple that in the next 2 years. That's a pretty ambitious target. How are you going to do it?
Yeah, thank you very much. It looks ambitious, but it is doable. We are looking at various alternatives and various strategies to help us achieve this. One of which is, looking at Kenya, the banking sector. We know it's gone through a rough patch, especially given the interest rate cap regime that came in. And so it really impacted the SME segment. They are perceived by the financial institutions as being high-risk segment. And with this, then, we saw most of the banks cutting down certain products to the SME segment or just wholly stopping the lending to SMEs. But as AGF, we think that perception should not hold water today. And through our products, we try to with time, as we engage the banks, ease out this kind of thinking. And the way we want to do that is continue to engage with the banks through these forums and more targeted forums with the bank to help them understand what the gains and the benefits of our products and how it will help them reduce their risk towards the SME segment. And with this, then they will be able to continue lending with the comfort of our guarantee. But on top of that, one other solution or activity that we want to engage in is to leverage on what you just touched on, partnerships with various other guarantee funds and financial institutions, for example, GuarantCo, with whom we signed a partnership on 1st March of this year. And this partnership then enables us to increase our capacity to enable access to financing to the SME through the financial institutions, through the banking sector, but specifically to the infrastructure segment. We know GuarantCo is a global entity, but focused on infrastructure, and they have a presence in Kenya. And with this, we want to leverage on that to increase our capacity within, to influence lending.
To be specific, when you talk about infrastructure, at least in the Kenyan context, what exactly are we looking at? So are we talking about energy? Are we talking about roads? Are we talking about water? Because infrastructure is, pretty wide.
Yes, infrastructure is wide, you're right. And, and you're correct. What we are looking at in terms of infrastructure is exactly that. Water, housing, affordable housing. We're looking at roads, that kind of thing.
All right.
But we're also looking at the entire value chain. Remember, we're talking SME.
Yeah.
So we're not talking about the direct contractors within the project. We're also looking at the entire value chain, the
so
SMEs
people who
that supply and are involved in the entire value chain.
All right. Speaking of risk, though, because this is your area of expertise, as you mentioned, 2017, horrible year for Kenyan banks. But there's a double whammy coming in because this is the same year we're trying to put in IFRS 9 rules in place, which deal with a whole bunch of other issues on how we allocate capital vis-a-vis whatever loans we've put out. So the question then becomes, if 2017 was already a bad year, assuming even we do repeal those rate cap laws this year, if 2017 was bad, but you've got IFRS 9 laws coming in 2018, and the banks themselves have said, look, this is going to reduce our ability to lend money into the market. How then does that affect your business?
Let me start from 2017. Yes, because of the slowdown in lending, there was no major impact on operations, but just minimal impact on operation. Now with the IFRS 9, which I think IFRS 9 should be taken positively with the banking sector, because it's looking at managing your book more proactively, so dealing with your risk more proactively than the way it's being done now. And with that, then you're able to sustain your business going forward. So it's futuristic. So we think IFRS 9 is a positive thing, but from an AGF perspective, again, we need to engage much deeper this year, more so this year as AGF, to bring in the understanding that that perception, that notion that lending to this segment is risky is not correct. Mm-hmm. And leveraging on products within AGF, then the banks we've dealt with before were existing banks today, our partners today, have come to realize this. And
I believe you're working with, what, 6 banks in the country at the moment? Or is it more?
In the country, there's quite a number. Mm. There are about 9 in the country. Mm. And they're starting to realize the importance of leveraging on the AGF products for their portfolio and for their books. And this has greater implication even from an IFRS 9 perspective.
Mm. All right.
And with the AA rating by Fitch rating agency for AGF, it even enhances the need and the impact on the bank's lending portfolio when they take on our facilities.
All right. Joshua Obengele, thank you very much for your time. Head of Risk at the African Guarantee Fund. Yeah. Thank you.